What is going on, everybody, and welcome to another technical analysis. And what I like to do in these videos is go over some entries and exits for potential plays I am looking out for the week. If that sounds like something you're interested in, consider subscribing, as I do also provide a weekly analysis that gives you upcoming events, upcoming earnings to get you prepared for the week ahead. If that's something you're interested in, consider subscribing, as I do also provide a daily pulse on the market on X at Hemi137. So go ahead and check me out there. But with that being said, let's go ahead and drop a like and get this technical analysis out of the way. So, as you can see, the past couple weeks, we've really gotten a lot of chop in general. We've had some bigger moves to the upside because we had some bigger events. But ultimately, right now, coming into this week, we got the answer that we wanted. We wanted to know about rates. I said that would be the next step. And now at this point, we are kind of more geared towards earnings and watching headline news, as we are going to continue to watch things start accelerating when it comes to essentially our economy, and watching things get a lot worse over the next 6 to 12 months as we wait for rate cuts to start slowly easing their way into the economy and understand how that essentially works. So, but technical wise, as you can see, we've broken above over the past 2 weeks. We've essentially done a break, a retest. Now we're kind of in price discovery mode as far as general index. But again, you have to understand that what's going on is you are starting to watch things deteriorate very quickly and very rapidly. So you have to be very mindful of what the current events are going on, and headline news really at this point until about the end of the year is pretty much what we're watching, or watching at least till the next rate decision, which won't be until November. So, and typically we do get into a state here towards the back half of the year where a lot of volume dies out just because it's the holidays. And then we start making our move up just because essentially you get that Christmas rally in essentially roughly around the January, February time period. But you again also have to understand what's going on. You have a big election and everything going on as well. So there's a lot of other things that come into play. This isn't your normal typical year, but you still try to associate it with a current, what a normal cycle would, how a normal cycle would play out. So as of right now, depending on how we open, will matter. We haven't gotten any news to this point, early Sunday morning. So that is a good sense as far as the stock market. So we're continuing to watch and see what happens here. As far as a trend here, we'll see where we land. We still need to build out this top portion of this potential channel that could be leading up. Again, you're on price discovery mode. And what we're looking at is essentially the next sediment, which may be Tesla. And what we're looking at, I've talked about this multiple times, is Tesla's kind of been maybe that next driver when it comes to robo taxis. That may be the next narrative that's driven before humanoid starts to get taking hold as well. So you do need to keep that in mind. But as of right now, technical wise, was looking for more deeper pullback on this, but again, with all the manipulation that's going on, we may continue just to watch this continue to go up. So at this point, what we're really watching is psychological numbers. So expecting a run for essentially, again, that 5,800 level, potentially going into the back half of the year for that Christmas rally. And then obviously, again, every 50, 100 points is kind of what you're really watching. So trying to look for something that could potentially gain momentum, as you're seeing a lot of other commodities and stuff position themselves for a run as well because of the uncertainty going into the election. Again, you're under 60 days at this point, so we're getting pretty close to say the least. So again, if you want this to remain bullish, you definitely want this to be kept above the 56.26. And then again, you are in price discovery mode as long as you hold above here in this level, roughly around that 5,700. And then psychological levels, you start playing out. Again, you are very, very toppy. I've talked about this for quite a while. As you've had the run up, I've talked about this run. This is what manipulation essentially looks like. That is our pause. And we've only had essentially one bad month out of this whole year, really, since we've paused. So Uh, Being said, I do feel like we are going to see some of this that we saw back in 2002 once we start getting rate cuts and stuff. So that's why I said you got to start paying attention, because these are all event based. These massive sell offs have been event based. And that's what we're looking at coming into the new year. I think once we get past the election, then you got a lot of other stuff to start dealing with. So at that point, you're going to start seeing more of this kind of action. I think you'll see some bigger red candles, and then a potential correction, which would roughly be around this 3,200 level. That's 42%. That's why I have this marked. Will we get that low? It's hard to tell, but we will see. Like I said, it's good to know your probabilities and when you're going into things. This is why I'm big into event driven and technical wise. Mostly just supply and demand is what I look for. Sometimes you get the channels work pretty good as well, but most of the technicals aren't very accurate to say the least. So, but as you can see, we are kind of getting into an ascending wedge. So if you look at this higher time frame, something I really didn't notice till right now as we're sitting here talking and discussing this, is you're really getting into this a pretty nasty little wedge here. Let's see what this kind of looks like. If I can grab this trend line here. This is a pretty deep ascending wedge. Well, that looks pretty horrific. I'm not gonna lie. And something I've said about these wedges, especially if you get the reverse of this, the descending wedge hasn't been working out over the past couple of years very well, but the ascending wedges have worked out really well. So the fact that this is a massive ascending wedge, essentially you retrace at least 75% of that. So you're kind of looking roughly around the 4,700s. You're looking about roughly about 1,000 points could be lost there, which would make sense if you were talking about a recession. That could be where we would at least hit. And then again, if it's greater than that, you're looking. I mean, that's already 42%. Really depends on how this thing is. And again, can't really bet against the house, but considering what is currently going on, who knows at this point? But not trying to fear monger, trying to make this more technical and understand that um, if we at least correct 42, or at least pull back 75% of this move, 47 would be a great position to really start buying a ton of equities at that point. If we start selling off to that point, now again, say we could go deeper than that. If the average recession is 42, so we would lose at least 2,000 points on the index, which would be phenomenal if you are in the position to be buying at that point. But again, just trying to give some probabilities on stuff to try to be as realistic as possible without being too much of a bear. Looking for this thing to correct down to that 47 would be ideal. You would at least have support here as well. So you would expect at least a significant bounce off of that if we did dive that deep. But again, I'm expecting more of this kind of move like we saw back in 2022 with the choppiness and the events with Powell and what's that associated with. I think would make more sense as we're getting this nasty chop since we've gone parabolic since the pause. And this is why it's good to know events to understand, yes, well, it was an event that caused that candle to go down, event that caused that candle to go down. This event was crazy. This was mainly taking place in just one day after Powell. It sold off 80 points. I talk about this pivot point all the time. And then essentially from that point, we started to change, and then we had some massive cutting. Inflation was actually taking hold. I started to get a grasp on inflation. That's why we started kind of roaring back up. But then again, unemployment started really spiking. And so because of the push up, and then ultimately understand we paused right here, essentially around the September, October period of last year, essentially put us parabolic, which was expected. And then ultimately understand again, we want to try to correct 75% of this wedge, which would essentially put us right back at the 47. Would be a great pullback to try to sustain a bullish market. But again, we don't know what sediment that comes with. And again, if you want fear the downside, you got to have a lot of momentum, and it's got to keep coming. And that's what could potentially happen. Once the election, you have to get past the election. Election years are normally bullish, and so they do a lot behind the scenes to keep that market propped up. So you have to really keep that in mind as you continue to watch this. So that's what we got in the SPX. So this week, may just continue doing a lot of chopping, to be honest, until we can get into, if we drop down again to the lower time frames, may just continue to chop around this section here as we wait for earnings to kind of play out, and then kind of go from there. Again, if you want to be more accurate, you can kind of clean this up, and this could probably actually go higher, roughly to maybe the 6K going into the end of the year. Wouldn't be surprised if we do hit that. Like I said, we are waiting for this thing to whole kind of unravel. So until that really happens, we got another month of potentially pushing up. But again, there's still a lot of bad news floating out there, so you really have to be careful. It could even pull back. If I corrected this to match up with this line, you're probably looking more at like 55 for a pullback, 5,500. So again, we can use those lines, but on the monthly, ultimately, that's what we're kind of watching is for. It doesn't matter which way it pulls outside of this. Ultimately, on the higher time frame of that month, it should end up still within this wedge at some point. So that's what we got for the SPX. Let's take a look at Bitcoin. Let's drop it down to the lower time frame again here, so it looks better. And again, that's what we're playing out here. Again, if the market's going to push up, I wouldn't be surprised as a hedge against people, a lot of worries and concerns. I wouldn't be surprised if we push up to 68. Still expecting this to play range. I think once they start pricing in a recession, this will correct back down to 53. Expect just a lot more chop, in my opinion, at least for the next couple months until the recession pricing in is done for us to hit a new high. That is my opinion. I think you could potentially attempt to run on this run going into Christmas as long as everything is stable as far as the news and there's not a lot of bad news that happens between now and the new year. I think we can make an attempt to try to get a new one. I wouldn't be surprised if we wick back down shortly after. But again, you want to break out of this 63K mark. And again, kind of looking roughly around that 70K mark is where you're looking at. Again, all depending on momentum. It's designed to go up, so you do have to keep that in mind. But ultimately, your other support here, if we can't break out here, your support is down here at the 52K mark. Is what we're watching, but we do have a nice channel. And again, it's very painful to watch this, and it's not fun and exciting, but that's what we currently are dealing with over the past couple of years. Some nasty chop. And the bonds are getting into this upward channel here. We haven't really defined that up channel yet, but I'm just marking it as of right now. We do have a smaller channel here. If you look at it, it kind of tops at the 103. So as long as the bonds can hold this 98, expecting this thing to come back up, and then trying to break the 101. If it can break that, I think it's got a wider spread to push up to that 106 mark. It's kind of really watching. So very important level here this week to try to stay above the 98. It's not saying, again, this is a daily. We've had it plenty of times where it's broken out and then pop back in. So you do have to keep that in mind with the amount of manipulation going on. That does tend to happen. So you do want to keep that in mind. But that's what I'm watching on the bonds. Again, with the bonds, you start getting massive rate cuts. It's not an overnight thing, but it will start pricing itself in. This thing could start gapping. If we start getting, we're supposed to get 50 more basis point cut by the end of the year. There's even talk of 75. If it hits 75, that is sheer panic by the Fed. That can start really building momentum. TLT is a lot about momentum. It has to keep going. The small blurbs and manipulation that goes on with this isn't really going to do a lot. And so you have to, again, understand it. It's just like the market, TLT moves off of volatility ultimately. So that's when you start getting the massive moves that come in TLT. So just really watching that, again, very critical level there. So I want to take a quick look at gold. Again, this is in price discovery mode. So again, you do have essentially have a nice zone here, nice support, but we've been going up nonstop. again, when we start pricing in a recession, expecting this thing to correct along with everything else, because we haven't, ever since we essentially broke out from this level. I'll have to look at a higher time frame here. So this used to be essentially that 200 mark used to be roughly a very hard resistance to break through. Obviously, you can see many years it's been rejected. And then we finally broke out. Once the market actually starts correcting, I'm expecting this thing to fall all the way back close to 200. A lot of people are saying this thing is just going to continue to run. I think once we get the election is over and we price in a recession, I think this will correct during that price in as well. And then we can at least see this thing back down by 200 as of right now. It's not trying to look that far ahead, but just trying to give you more of an overview of what's going on there. But obviously, everybody wants to say that it's just not going to happen. You have to understand the way markets happen is there's corrections all the time. You can't just keep going parabolic like this. But again, you're in an election year. You have to take into account what's currently going on for a lot of these things. So price discovery. So again, psychological numbers. You're looking at your 5-point increments for something like gold, and then looking for it to hold support around that. It's got good support around the 231 and then the 220 if it starts really correcting. But again, I don't think that's going to start correcting till the market starts really correcting. So watching that there. Then as always, let's take a look at Tesla. Tesla could be getting really ready for a breakout here, especially with we have the big news events here coming up for their next earnings for robo-taxis. So we'll see if they delay that again. That's not a good sign. That may actually hurt Tesla a lot more than it does anything else, because that's really where it's been getting its momentum from. So we'll continue to watch this. It may chop. Right now, our ceiling is really that 264. I wouldn't be surprised if we go up to 300 on this rally, especially if it's positive for robo-taxis. So just keep that in mind. As the higher time frames again here, it looks like we're trying to break out. Again, this is the monthly. Unless for some reason it starts selling off heavily and gets back in here. If they essentially announce a delay by the end of the month, this may come back, squeeze back into here, and may start pulling back. That may it's not a good sign for Tesla. Like I said, Tesla needs some positive news. The sales are struggling just because of the economy in general. So really watching that there. But again, playing the zones very well. Again, the top range being at the 265, roughly holding around the 231. And that 200 mark as of right now. So we'll see if this does pull back at all during the next 2 weeks, and then kind of go from there. Again, we're really just watching momentum at this point. Obviously, Palantir made the SPX now, so it's breaking out of this, expecting some sort of pullback, at least the 235 or the 35 mark. If it does break back below that into this channel, expecting it to go lower. I think when we do price correct on this, I think we'll get probably 75% of this move here, which I think we could probably, I think the closest you'll probably get on this, even on a recessionary period, is maybe $20. But I think that's could even be a stretch for this, because there's a lot of momentum finally coming back into here. But again, you never know. If the momentum on the market general sentiment is overwhelming, this thing can come a little bit lower. But I think even if you break to 20, I think your lifespan of this stock being that low won't last very long. It's probably one of those weekly wicks where it comes down below 20 and then it flips and starts pushing back up. So again, there's finally some great news with this company, so we really have to watch it. But as of right now, you're getting solid candles. I'm looking for that, like I said, that pullback to the 35 at least. And then as long as it can hold that price discovery mode and $5 increments is what I'm looking there for Palantir. Take a quick look at Amazon as it's running into earnings. I think you could potentially top out the 200. Again, massive run up, looking for better structure, as this is, massive selling, massive up, essentially just correcting. But right now your 200 is kind of that ceiling. Expecting that to hit for at least the earnings, or running up to the earnings, and then probably some bad earnings again. And then this might price correct, although its last earnings was pretty solid despite everything. But again, I think a lot of people are saving money just by going to Amazon, and saving money as opposed to having to pay for gas and going out and driving and doing things like that. So I think that's a big thing, and their cloud infrastructure has definitely helped them a lot as well. So again, looking for that run back up to the 200 going in earnings, and then see where it goes from there. But again, this week will be an important week because we're kind of really seeing what's going on with everything first. Now, PayPal, I talked about this. It's actually starting to break out. We've talked about this multiple times. So we're sitting around the 58. It's finally starting to break out. As long as it can hold roughly that 75 will be important, as we are potentially aiming for 90 at this point. If it does price correct and come back down, which I'm expecting to it come down, I think that may have been our low back in 2022. I've referenced this a lot because at this point, even a major correction, I don't think this is going to get that low. But again, yeah, essentially the meat, if we are correcting 42% and that does happen or anything greater than that, it's going to have to come off of tech because tech is again one of the growth stocks are the biggest ones are going to have the most meat on the bone to essentially take off. So really watching this, but it's looking very, very promising as of right now. So moving forward. SoFi, again, this one can be iffy and can sell off very quickly. So just keep that in mind. So right now we're looking for this to hold the 770 mark here. Again, our price target right now is $9. If it can break that, and then we're looking at $10. But ultimately, if it can't break that, expecting it to come back down to the 642 mark. But watching that there. Now, these are two ones I really want to be watching moving forward as well. I've talked about this one before when we're in this zone, kind of floating around this zone. There's a lot of different support here, so it's getting really choppy in general. But essentially, again, their growth rates and everything are doing very well. Even though they had these massive growth rates, and then they started seeing some decline. So this is going to be for both Celsius and for ELF are in the same kind of category. Their growth rate isn't like 70% anymore. It's dropped down to like 40%, which is still outstanding, but you have to price that in and a lot of people are expecting to get a lot worse. But I think you may have one more quarter of it kind of getting bad, but I think it's stabilizing at this point. These are the times you want to be buying, not when this thing is running up like this and be buying at the peaks. You want to be buying when it's pulling back like this. So as of right now, starting to build some good, solid momentum here, as you do have some great support around this area, roughly around the 32 mark. Can go lower, could potentially even, I think if this really wants to start getting nasty, I think worst case scenario, it could get down to 16. There's great support here, but currently as of right now, there's pretty solid support here. So looking at this one here for a potential longer swing coming forward. So I would be very careful about this or anticipate holding this for a longer swing if you are going to enter this. Again, none of this financial advice, but I do really like this company, and right now it's starting to become a good buy. You start gradually going DCAing into these positions. Would be great, but ultimately it could get down to 18. I think, like I said, worst case scenario, I'm not expecting this thing to drop all the way down that far. I don't think you'll get below 20. Not saying it can't happen, but I think that is a very solid support. But you're currently seeing at a great support as of right now. Just in general. So really watching that one there. And then same with ELF. The company has done really well, had some amazing growth to this point, and they're still at like 48%. The fact that I think when you're talking about recessionary type things, ELF was still a very, very great buy, and they're still at like 48%, despite not being the 70% that essentially took us up to 220. But I think it's a great position to start taking a position. Again, this thing could even drop down to 87, just below 100. So do keep that in mind, just like Celsius. But I do believe it will hold firm. And the massive growth rate it still has is amazing. People are just upset because they were buying it up here. Like I said, you want to buy on these deeper discounts. Like you see here, you have a deeper discount and then it rockets up. And that's all it's going to take is one earnings, and this thing's going to be back up around 200. So that's why I think those two are really good plays moving forward. So just do keep that in mind as we continue to move forward there. Now, let's take a look at BA. I think I only have our two regulars plus an extra one if you stay to the end. BA is starting to break this 160 mark, which is not a good sign. It's had continuing to get tons of bad news and finally starting to sell off. Expecting this thing to get down to 220. Again, it's value plays, so it's a lot of the market could start coming down because of this. You're losing value. Last thing we need is finances to start selling off heavy, and then that would pretty much be it. And then tech would soon follow. So see what happens here, but it is starting to pull back, so we'll see what happens. But again, now this is resistance here at the 164, so watching that moving forward. And then JP Morgan, again, this is going to be important that this is sustainable or else it's going to drop. Now your new resistance is at 215, which has rejected us a couple times. I'm expecting this to at least make it up to that, get rejected, and then your support being here roughly around the 200. Again, it only moves a couple points during a week, so not expecting it to do too much. If it does get down here, you need some bigger news, but if it can't hold that and breaks that, you're looking at the 180. It is a higher low, so it could start really ramping up and potentially making a new high. Like I stated, this is becoming more of a speed bump as we're more looking at this being a zone up here, roughly on that 225. So we'll have to look and see how this does play out. This is more of a speed bump here. So we'll see how this plays out by the end of the week, but looking for a hard rejection since it's a first test, looking for a rejection to pull back a little bit and then potentially attempt to do the 225. But if it on that attempt to go back and break through this after the first rejection, if it rejects again, starts selling off, we're aiming for this 200 mark down here. So, and then our last one, like I said, this one is could be really good. Again, this is a more longer term play here, but Nike has a really nice wedge of creating here. Let's see if it can hold this 86 mark. If it gets rejected and comes back down to the 70 mark, could really be a fantastic buy. I think it's a very historical buy as of right now. Can do really well, especially the brand and the name. You want strong brands and names going into recession, so just keep that in mind. But it's sold off so much from now that this one could really play out. So really watching to see if it can break out this week. If not, you definitely want it above the 93 mark by the end of the week. If it can't do that, again, this is a monthly, so we got 2 more weeks where it's going to attempt to try to break. If it can't do that and wicks back into here around the $85 mark, that can be concerning. As it may be reattempting to come back down here to 72. If it gets down to 72, I will definitely be looking at buying some Nike at that point to see where it can go from that point. So with all that being said, if you do like this video, remember to drop a like and share. And until next time, I'll see you guys later.